Hey, good morning, everyone. Uh, Paul McMahon here with Forex Smart Trade. So glad you could be with us this morning. Our goal here at Forex Smart Trade is to help you become the best version of yourself. And we do that by helping you become financially independent through currency trading, using our super accurate proprietary indicators and our best in the business one-on-one training. So with that, let us see what we've got going today. We'll start with our disclaimer.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange and futures trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
Boy, that guy is negative, huh? That's not a good way to start our day every morning. Just going through announcements. We have lots of opportunities. The company provides lots of opportunities to watch traders trade. The top part here is the light schedule. The bottom part is the member schedule, and then there's also paid sessions. So the more opportunities you have to watch other traders trade, you should. In the beginning, I always used to do it. Now, not so much, as I'm able to read the indicator. But say for the AIT, I usually fall asleep around 9:30. So, I used to set my alarm to do this. So, as many trade sessions as you can go to. In the beginning, I would also copy the trades. On average, historically, they're net 150 pips on average a week for many, many years. So they're quite good. If you want an additional opportunity to trade with me, give a referral. Give a referral, and we will let you come to the Thursday tip-top trade. By providing a referral, we'll let you come to this for 3 months. It's Thursdays at 11:30 a.m. I do it with Phil. We're both pretty good traders. Probably Phil's even a little better than I am. So it's worthwhile to go to. Last but not least, as many of you know, I like to work off of a checklist. It's kind of like a pilot's list before he takes the plane off to make sure everything is going okay. So first thing I always like to do is make sure my chart is current. I know that I'm connected to the internet when my green chart is green up here, and that my chart is live when it is green down in the little corner here. And for CoinEx, let's take a look. Do we see the numbers bouncing? Yeah, I see the numbers bouncing over here. So we're connected. We're connected to the broker. Review of yesterday's trades. Since we only do this on a weekly basis, it's not quite as impactful. But in the beginning, you should be keeping a little journal of the trades you're taking. Also, just take a quick screenshot of your screen of what you're looking at on your chart when you take the trade. That way, we can give you some feedback as to why it may may not have gone the way you wanted to when you were looking at the chart. Last week we took a 10-point and a thick orange line trade. Both trades closed for about 15 pips. Fundamental analysis, we go to forex.com. We want to see if there's any news today. We are technical traders. The indicator is very good at picking up price action movements. So if there's going to be a news item, we don't know how the news is going to impact. We don't want to get into trying to analyze how the news is going to impact. There are guys out there who do that. We don't. We will focus strictly on price action. So knowing that, if there is a news item, we kind of don't want to be in the market when that happens. So we go to forexfactory.com. It has a little news feed here, Tuesday, November 17th. And it breaks news down into 3 categories. Yellow is low impact, orange is medium impact, and red is high impact. So today there's OPEC meetings. They've categorized that as red. Last year or two, OPEC really hasn't moved the markets much. And when it does, since oil is quoted in dollars, it usually impacts the US dollar. This is going on all day. But what we do need to worry about at 9:30, they're announcing retail sales. Those are red. We're at 6:30 now, so if we do take a trade on the dollar, I kind of want to have, I want to be confident that we're kind of out of it before we hit this 9:30 mark. And then this afternoon, at 2 o'clock, Fed Chairman Powell speaks. This could impact the market, especially some of the stuff he's been saying recently about, trying to keep the economy going during the pandemic. So, generally, I'm done trading by noon anyways. So, I'm not going to be in the market when this happens. But for those of you who are trading, you need to be aware of that. So we've got basically we've got to watch the U.S. dollar at 9:30 and 2. On this trade, I use 2 techniques. The one technique is kind of my bread and butter technique. It's the 10-point trade. 10-point trade, I am looking for situations where we are overbought and oversold, and the majors and minors are turning. So we're going to start here in the middle with our majors and minors. Blue line is overbought, red line's oversold. When all the lines are above, that is an indication of the beginning of a sell movement. But to take the sell, I want all of these lines pointed down and double crossed. So I don't have this here on the euro dollar. So let's keep going and seeing what we have. Pound dollar overbought. Everybody's going up. Australian US dollar, we're starting to point down, but this is really more sideways. Majors are going sideways, minors going sideways. So we're going to pass. Dollar Swiss franc, we are oversold under the red line. Majors are going up, minors are going sideways. I want everybody pointing up. Why do I want everybody pointing up? The more lines that I have going in the same direction, the greater the probability that the signal will do what I anticipate it doing. It's all about being a good trader is 2 things. One, taking accurate trades, and 2 is proper money management. So taking a proper trade, I want to have as much in my favor as possible before I take the trade. Dollar yen oversold. Majors are starting to come up, minors still going down, so we're going to hold off there. USD Canadian oversold, and everybody's going down. Now, is there a, is there a possibility of taking a trade when we're down here? Yes, but I don't know how many pips are left. Pips are left in the move. And if I'm going to take a trade, I want to try to kind of maximize my pips. And I'm going to maximize my pips if I catch the trade up here. So say on the USD JPY, when this crossed up here, if I were able to have caught that when the cross happened, that was worth 30 pips by the time we got 2 hours into it. You could have even gotten out here when you started to see the bend. When you saw the bend, that would have been worth oops, can't see that. Let's do it this way. Would have been worth 10 pips. So I want to get the full run when I'm taking the trade. I don't want to be left exposed. I don't like taking trades for small amounts of pips. I want to try to get my 10 pips unless I'm taking the thick orange line trade and move on. So nothing on this set. I've got 3 sets of these composite charts. This set is primarily non-US. So let's see what's going on with some non-US currencies. Euro pound oversold, still going down. Australian dollar yen. I was overbought. It turned. I'm coming down, and I'm not quite halfway. So I like this. I've got 3 points here. 1 for being overbought. 2 for the majors coming down, majors and minors coming down, and a 3rd point for the red coming over green and the black coming over gray. So I've got double cross, everybody pointing down. So let's go up to, once I have that, I'm going to go look at my TNTs, and I want to count how many lines are going in the same direction. The 2 orange lines are coming down, although not that steeply. And dotted blue is going up when the blues are inversely related. So when blue goes up, that means down. So 3 of the 4 are telling me down, although I don't have steepness here in these orange lines. But I've got 3 out of 4. So now I'm going to look at the pressure. I've got down pressure with green on top. So the down pressure gives me 1 point. So that is 7 points. 3 here, 3 here, 1 here. Once I have my 7 points, I then want to take a look at, you know what, actually, let me take a look. I don't remember if I changed these charts. I did. All right, very good. Let's take a look at the full chart. So I want to look at the different time frames to determine if I want to take this trade. So I am going to open up open up this chart, and I'm going to just change it to AUD JP. So to change the chart, I'm going to go to chart settings, go to symbol, AUD JPY, click apply. Okay, all of my charts are linked. Going back to my checklist, I want to, oops, let's see here. Somebody's got their mic on. I want to do a technical analysis. I want to know what the trend is, where the support and resistance are, what the channels are to take my trade. So to do that, I am going to open up let's see, interactive. Let's bring this together. And I want to put some support and resistance on here. So as you can see, and let's actually also save this so we don't get confused. Save as AUD, JPY. The S stands for standard time. I want to, since I don't trade it on pairs that I trade regularly, I've got my support and resistance put in, and I've gone back 10 years to put it in. Here, this chart is 90 days, so I'm going to kind of do a quick and dirty support and resistance on the 90 days. So I am looking for spots where the candle seems to stop. So I've got a little stopping in here, a little bit in here, a little bit in here, 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 here. And the reason we do this is because the market seems to replicate this. So here we've got some stopping. Get some stopping in here, got some stopping here, stopping over here. So I want to go one above and one below. Let's see. Right in here, we've got some stopping. Right in here, right in here, right in here, right in here. Let's put one above. Right in here, it stopped quite a bit. It seemed to stop in here. Right in here. Right here. 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 All right, so we've got some support and resistance in there. And what are we looking at in terms of trend? Well, for the last day, it's been kind of sideways. Let's open this up a little bit. For the last day, it's kind of been sideways. You might argue that it's been up a little bit. The last 3 days, the 3 days in front of that, it's been down a little bit. 3 days in front of that, up a little bit, down a little bit for the day. And then there was some big news item that caused a big jump last week, the beginning of last week. So we've got a slight up. Let's get rid of these now. So we get a slight up. The reason I want to know this is because it's going to factor into how many pips I want to take. If I'm trading into a up market and I'm taking a sell trade, I'm going to take less pips than if I'm trading into a up market and I want to take a buy trade. So looking at this, I've got say 11 pips, 12 pips till we hit this line going up, and I've got about 12 pips coming down. So in any case, I'm not going to probably take more than 12 pips on the trade. So down, 3 out of 4. Looking at my 2-hour chart, we're oversold, but it looks like it's trying to turn down. I've got down pressure. Right now on the TNTs, everybody's up. I've got 3 out of the 4 up. On the 2-hour, I'm coming down through the channel. And I've got the pressure is sideways. Sideways pressure generally means retracement. Retracement means I'm going to go back and copy a previous candle. Looks like it might want to copy this one here. But I've got the green starting to come down. So I like that. I've got green down here. I've got green down here. On the day chart, I'm coming down in the channel, but it's mixed. Majors are coming down. Minors are going up. When there's a difference between what the majors and minors are doing, I'm going to pay a little bit more attention to the majors. I've got, again, this kind of sideways pressure, green slight up. So maybe retracement. Retracement will be of this candle. So I'm going to come back and maybe try to capture some of this candle. That's another 26 pips there. On the 30-minute, I've got down with green coming down. On the 5-minute, I've got down with green coming down. I like this trade. I've got nice steepness here on my majors and minors coming down. I don't have steepness on the TNTs, but I'm going to go ahead and take a 10 pip sell trade on this. So we'll open up our charts. AUD, JPY, and you can see I haven't traded that in a bit. So I am going to open it up, file, new chart, AUD, JPY. It's not in this first group, not in this second group. Let's see if we find it. AUD. Oh, there it is, AUD, JPY. I don't like this screen, so I'm going to use, I've got some templates set up. I'm going to use one of my templates. So I'm going to go ahead and take a click new order, check my symbol, it's correct. My volume I need to adjust based on how much I have in my account. I've got $8,100. This is a demo account. I'm going to move my decimal spot over 4 spots. 1, 2, 3, 4. So I'm going to take a 0.81. With a 0.81, I can have 2 open trades and still have a good margin. So it's going to be a sell. Records a trade underneath. Now I'm going to put in my take profit and stop loss. Modify, so I right click anywhere along it, go to modify. I've already got in here the preset of 110, which is 11 pips, and 550, which is 5 times this. I'm going to go and take a look at the chart before I kind of finalize this, but right now I'm going to put it in so I've got something in there. 11 pips is okay. It's still under that 12. And now let's just go back. I want to look at the chart. And normally I like to go 2 support and resistances away. So 2 support and resistances away. If I am taking a sell trade, here's 1 support line. Here's the second support line. I want to be right around here. I want to be outside where this peek through occurred. So here's the support line, the resistance line. I want to be on the outside of this little peek through. So it hasn't traded here in the last 4 or 5 days. So 76.802, 76.802. Let's go back and adjust this 76. I'm a little higher than that. So 76. 802. I didn't quite need to be 550. I'm going to bring it down to about 450. And we're just touching it. That's okay. We'll leave it right there. let's see if we have another trade. I'm going to go back and take a look at using, because we're approaching the top of the hour, we've got 5 minutes left in the hour, and it's morning time. The thick orange line trade works very good at this time of day. Thick orange line trade is one of our simpler trades. Signals, it basically is looking at this number here. This number is the scale on the thick orange line, and it goes from 0 when the line is as high as it can go. When this line is at 0, that is telling us we do not believe there's any more up in the movement, to minus 100 when the line is as low as it can go. When it is as low as it go, it's telling us that we don't think there's any more down in the movement. But in order to kind of confirm that it is indeed as low as it can go or as high as it can go, we want confirmation of that. And the confirmation is by them looking at the majors and minors and seeing how overbought or oversold they are. So let's go ahead and take a look. Doesn't have to be exactly 0 or minus 100. It can be within 10 points of either end. So minus 26 isn't close enough. Pound dollar minus 4. That's within 10 of it's within 10 of 0. So let's go down and take a look at my majors and minors. My majors and minors are telling me we are well overbought. So I've got part 1, part 2. This trade is worth 5 pips. So I'm going to go ahead and take a 5 pip sell on the pound dollar. So let's open her back up. Pound dollar right here. New order. Symbol's correct. My volume 0.81 is correct. I'm going to take a market sell. And this is going to be worth 5 pips. So I'm going to go to modify. I'm going to change this to 50 points is 5 pips. And because this is accurate over 90% of the time, we're going to use a 4-to-1 stop loss. So I'm going to put 200 in there. And the only other thing I want to check is I want to get my full 5 pips. So I got in at 32.69. So if I go down 5 pips, I'm going to go to 32.64. 32.64. So I'm going to modify this. 32.64.5. So 695 to 645. All right, so we took 2 trades. One was a 10-point trade on the AUD JPY for about 11 pips, and the other is a 5 pip thick orange line trade. Let us just stick around for another minute or two. Some people on this trade, on the thick orange line trade, when this clock changes in 22 seconds, want to see this number decrease by more than 10. So I'd want it to go from minus 13 to from minus 3 to minus 13. That gives extra confirmation that the signal is good, that it's still not going up. So let's see what happens in 3 seconds here. Boom, and you see it went down by almost 50. So that's telling me it's going to start coming down. So we've got a good trade here. Any questions, comments, concerns? Let's see. We've got a question here. Let me see. Notice that you don't wait till the top of the hour for the post. On the thick orange line, we could have waited. Some people do wait. I am okay taking the trade if I've got the two confirmations, then it's the top of the hour. On the 10-point trade, if I'm trading off of an hour chart and we are more than 30 minutes into it, I am okay taking the trade also. Some people like to wait for the top of the hour. If we go back and take a look at when let's go back, we took that trade maybe 15 minutes ago. We had down. I don't know that we were going to get a good entry off of this. We've got so much down coming around here. I don't know that we would have gained anything by waiting. In fact, it's continuing to move down. So we had a good enough signal to go ahead and take the down move. What I also liked, the green pressure tends to be a little bit stronger. So one of the things I do like to look at is what that green line is doing. So we've got good down on the green here, good down on the green here, down on the green here, down on the green, down on the green. The slope probably isn't quite as good as I want, but the slope is pretty good. This is coming down at a pretty good slope, as is this. We got this little bit of a bend here from last hour to this hour, steep, and then it's not quite going as steep. The steepness declined between last hour's candle and this hour's candle. But again, you see, since it's early in the hour, this thing is bouncing around. So the steepness is good. I think we'll be okay. All right. Thanks, everybody. Glad you could make it. We're here to help you become great traders. Bye-bye. See you next week.